Good afternoon. Thanks for joining us. We had some fireworks with the report today, so we're going to talk about that. Also, we didn't do a video on the June 30th acreage report, and we'll talk about that first just to kind of give some background into the numbers that we saw today. So looking at that, this was, like I said, the acreage report. This was on June 30th. This came out. And again, soybeans were the big, kind of stole the thunder of that one too, acre-wise.
They did. When you look at where the acres fell into play, everybody was surprised that soybean acres were going to see such a decrease, and that we saw such an increase in the corn acres, because of prevent plant. Now, where we pushed the acres to actually has USDA indicating that prevent plant is going to be a very minimal crop this year as far as taking up some acreage, because most of the acreage is going to be chewed up by the other crops, primarily corn, which came in, with 5 million above the previous year. North Dakota, according to the report, planted 950,000 more acres of corn, which was a little bit of a surprise to a lot of the producers in North Dakota.
And then we have some of the minor crops. Anything stick out to you here?
What was interesting is, we did see, majority of the acres went to the primary crops, to corn, to wheat, some of the major ones that's where everybody kind of migrated to. A lot of the minor crops, other than barley and canola, saw a pretty good decrease in their acres. Now, whether or not it's guys couldn't get contracts or prices dropped enough where it made it put them a little bit out of the realm of profitability, but it does show that corn's profitability when everybody was planting was enough to encourage the acres, along with the increase in wheat and the barley and canola for that matter.
And then USDA has some nice charts for this. This is this year's principal crops by acreage. Corn is the big winner this year with the drop in soybean acres.
And it kind of, what I like about this chart is it shows just how significant the big crops are, the corn and the soybeans. I'm surprised that hay acres are as big as they are, but this kind of shows in order what our major crops are.
And then this one shows the percent change. Rice was the big winner, up over 20%, and sunflowers there were percentage-wise the big loser, down about 20%.
And then you look at the rest of the crops and you kind of figure, we kind of fell in with what was expected. But, corn, even though we're seeing big acres increase, it was only 6% from the previous year. Canola jumping 3%, spring wheat up about 3%. Durum was one of the local big loser, dropping almost 10%.
And then that same chart, looking at the acreage instead of the percent. And of course, corn and soybeans kind of skew that because there's so many acres there.
Exactly. I mean, this showed, just how many acres were increasing from the previous year. And again, corn acres commanding most of the attention and grabbing most of the acres, and pretty much takes almost all of the acres that we're seeing leave the other crops.
Okay, so keep that in your head as we talk about now today's report. First of all, we're starting with the USDA kind of cleaning up numbers from the old crop. Anything stick out to you here?
Well, we knew that USDA had to come in and make some adjustments to the demand side for all three of the crops, the wheat, the corn, and the soybeans, because the last two quarterly grain stocks estimates have shown a decrease in stock. So we were expecting to see, feed demand increased for wheat and for corn, which it was, and we expected to see residual increased for soybeans. It's the easiest number, which it was. But what was interesting is that they increased imports of soybeans, decreased exports of soybeans, and they cut seed demand along with the residual number. So they made some pretty big cuts or some adjustments as far as the supply and the demand side for soybeans were concerned. But we did see, of course, ethanol very much needed to be cut because we've been running behind our pace, that were our expectations. Exports, same thing. But we have been feeding a little bit better. So I would agree with what they did to the old crop numbers for corn and for wheat. A little questionable yet why they made such huge cuts to the demand side on soybeans.
So that was old crop. Moving on to the new crop numbers, we'll start with the corn and soybean numbers. And again, the acres we knew from the June 30th report, and everyone was expecting to see this huge cut in soybean production.
And that didn't come into play here today. Everybody was, and we knew we were going to see the acres drop. You're right on that, because that was pretty much told to us on June 30th. We did not expect that, everybody's also expecting a yield cut. Well, kind of hard to see that, I think, at this point with the weather forecast. We did see it for corn. So we did see the yield decrease, not as much as expected. But in the big picture, we didn't see corn change that much. The big change came, of course, in the production side for the soybeans.
Why do you think they dropped the corn yield 4 bushels and left the soybeans unchanged instead of lowering the soybeans also?
I think because there's more time for soybeans. Of course, soybeans' critical month is that late second half of July and into August, and they're looking for some improvement to come into play about that time frame. We're also seeing, of course, once we got to July and the crop went into pollinating stages, a lot, the weather changed where it got cooler and we picked up more rains, and the crop has showed an improvement. So I think USDA is playing a waiting game as far as soybeans. I'm not saying that they won't make a cut down the road. I think they're waiting to see what the August numbers are going to show before they do it.
Okay, so moving on from that, let's look at the wheat production before we go on to the ending stocks for new crop. Anything here that was a big surprise?
I was surprised that we increased production numbers for wheat. Now, what that came in was, we saw an increase in the yield, which was more than anticipated. We have seen the wheat conditions improve a little bit, so I think the market was leaning towards a little better production in some of the major states, especially the winter wheat areas. So I am very surprised that we saw the production increase as much as we did for wheat. And then in spring wheat, we did see a jump about 6 million from what was expected. Durum, though, on the other hand, lost that same 6 million.
And that brings us to the new crop ending stocks. And this is the numbers that kind of shook the trade. We look at the soybean, 105 million bushels higher than the average trade estimate for ending stocks.
And that you're right, that shook it pretty hard here today. Look at the corn number, wasn't that big a deal. 13 million bushels above expectations, 5 million above the previous month. You'd think that was a neutral report as far as the corn is concerned. So, for wheat, it's a little bit negative when you come in 24 above expectations, 30 above the previous month. So, that's a little negative, but yeah, you really have a bearish number when everybody's expecting sub 200 and it comes in at 300. That really hit the soybean trade hard and forced the market down, which spilled over into the other markets and pushed them lower as well, just off of margin call selling and needing to make margin calls.
And of course, for the soybean, the big cut there was to exports, 125 million bushels. I don't think I've ever seen a 1 month cut that much in an export report.
That was a big cut. And even coming in and cutting crush by 10 million was kind of questionable, since the last 3 months we put in record crush numbers. Now we'll see a NOPA crush here, I think, next week. But that export number tells us that, one, that we're looking for a lot more demand to be switching over to Brazil with their big crop, and that our concerns or our tensions with China continue to be a big factor as far as our sales.
Now we did, that soybean, the change from the estimate looks awful, but we did lower the soybean ending stocks 50 million bushels from the prior month. Just was not as much as expected.
A little bit of headway, but yeah, just the fact that we were so far above expectations, that's what kind of hurt the market more than anything.
Okay, moving on to world numbers. These are the old crop world numbers. Went down for corn, higher for soybeans, and wheat was kind of a big jump, wasn't it?
Wheat was a big jump, and that was, I think, probably a little bit more negative on the wheat side is the fact that our old stocks for the world decreased. And that tells us that there was some production increases in some areas, some demand slowdown in other areas, whereas, even Russia is starting to see some trouble with exports. For corn, it was actually, the world number was actually a little bit friendly. You'd have to say a little bit negative more towards the wheat and the soybeans.
I didn't include the breakdown for old crop, but for new crop, I did put the world numbers out here. And again, we kind of flipped for the wheat. Now wheat was lowered in the new crop numbers for some of the major countries.
And we've kind of expected that. I mean, we've been hearing of, some issues in some of the other countries. So, yeah, I mean, seeing that's now in print, Argentina's having trouble getting their crop planted, so we lowered it a little bit there. Canada, because of the dry conditions, the drought conditions. EU, because of wet conditions. So we did drop production quite a bit for the wheat side, which that is somewhat friendly to the new crop, world new crop numbers. For corn, of course, Ukraine was up a little bit, and for the Brazil and for Argentina, we're waiting to see just how the crop gets planted before we get too worried about production there.
And then moving on to the new crop, world ending stocks. Again, wheat was the big swing there.
And a lot of it due to the lower in the production side because of Canada, EU, and those other countries. And so that really helped to bring the wheat world numbers to be somewhat friendly. But again, like you mentioned, corn really not making much change at all. Soybeans lower than expected and wheat lower than expected. So that gives us a little bit of hope going forward.
And then USDA does update their estimates for what China will import worldwide. And there they did what they increased, I think, old crop 1 million metric tons and then took one away from new crop.
Which it's good that we're still looking at it increasing from the previous year. So, I mean, it's encouraging that China's still going to be in the market buying. The question is, will they be buying from us or will they be buying from South America?
And that is all we have. Anything else you want to add, Randy?
USDA's doing the shock and awe thing. I mean, they did that in the June 30th report. Again, it came into this one. I would expect as we go forward, we're going to see some more adjustments to these numbers. I think that we'll see soybean yields decreased a little bit once we get into the August timeframe. As far as yield acres, that's not going to change until we get into probably October or the January report. But for right now, these are the numbers we got to work with going forward.
Okay. There's our contact information. If you have any questions, you know how to get a hold of us. Thanks for joining us.